Hello everybody, this is Ryan Butcher with North of the Blue. As you can see, we're taking a look at Dow Jones DIA, and I have the bars on along with the support. So you can see the green support lines are the horizontal lines that I come across, and the bars represent the low and the high of the day, and the horizontal bar across represents the close. So as you can see, at this very large drop, it started dropping, and it almost every day hits one of the support lines and then closes below. So the next support line is around $110, but on Friday it did come back at the end of the day and came back to close at the up 54 cents at $114.25. But the real thing I want to take a look at here is the 3-year overview. So go to stock charts, pull up the 3-year overview, and we will type in DIA to look at the Dow Jones again. So real quickly on the 3-year overview, if you're not familiar with it, this is still the blue moving average, and take note in the black trend line, you do not need to worry about the red trend line. And so if you look right over here, we see the black trend line has actually passed down below that blue moving average. It did this last summer too, not as rapidly, however, and it came back up and played with it a little bit. So if you do want to take a look at the support lines, as you can see, it's quite there's quite a lot of support lines in there, and it's really hard to take a look at. So I just keep that clicked off. But I want to go back in time, and we'll just go back 1 year to August 5th, 2010, and that should show us the past. And here's what happened in 08. As you can see, we had these large drops down below the blue moving average, and then it continued to drop down. So the 3-year overview is really a big tool to use, that when the trend is below the blue moving average, it is best to be out of the market because it is uncharted territory as far as I am concerned. So let's go ahead and take a look at the overall market, and that is going to be IYY. As you can see, we had the very large drop again with the entire market, and take notice that we are in the 15%, and we will probably dawdle around there unless something unexpected happens on Monday to bring us out of this 15% zone. So when the power lines are together, that means that they are at their maximum amount of power. And right now the power lines are headed up. However, we have the trend is down, and we have this red day. So I'm unsure of what direction we're going to go, if we're going to actually start recovering here, or if we're going to continue to fall down. So I'd rather be safe than sorry. So following these rules, I am looking for ETFs or stocks that look more promising than our overall market. So for that, let's go ahead and take a look at gold. Gold has been continuing to rise. So here is the rule for exiting. So we have the basic rule, which is when the trend line turns black and the power lines are moving up, that is the time to enter, because as it is going north of blue. And when the trend lines turn red, that is time to exit. However, sometimes people want to retain more profit, so what we have is the power exit rule, which states that when these power lines drop below the 85%, as you can see back here in May, that is the time to exit out of the stock, because you are not waiting for this trend line to drop all the way down to the blue moving average, which right here would be about $150. And we'd enter at, let's say, 148. So that's only a $2 gain. Instead, we would want to get out when these power lines dropped below the 85%, and you'd probably be getting out around 157 or say, if that happened. So that is the power exit rule if you are in something as such as gold or government bonds, which would be TLT, that just went skyrocketing up, and then on Friday it just dropped $3.04. So as you can see right there, it is on the line of 85, and if that dropped through the 85 line right there, that would be the sign to exit the Treasury Bond Fund TLT. So I hope those are some examples that everybody can use. And here is one last example. We'll just bring down to SLV. SLV did drop below the 85%, somewhere around $38, spiked up and then couldn't hold and dropped down again. So it is resting on the blue moving average. I am interested to see what silver does, and I'm surprised it did not go up with gold. However, silver has been very volatile since the May crash. So again, look at the IYY, SPY, DIA, all those ETFs, and you can find those under the lists, either in ETFs, Dow Jones, or key indexes, which holds some of the bonds and all of the key indexes that are really important to watch. So take a look at that. Take a look at the 3-year overview, and we'll do that real quickly with the IYY. This will be the last chart we're going to look at in this video. And as you can see, the overall market is below the blue moving average. So, take in consideration what North of Blue is telling you. Remember, this is to protect your portfolio, and I would follow the rules. They're there in place, and they are proven. Thank you, everybody, and have a great day.